Good afternoon, everyone. We're just waiting while people come in. Karen and our team's just bringing people in to the webinar now. Thank you for joining us this afternoon, and hope you've had a good first month of 2021. It looks like numbers are still ticking up, so we'll give it another second. We look fairly stable now, so why don't we make a start? First and foremost, if you can hear me, could you just pop a signal that you can hear me in the Q&A box, just so we can catch any snafus with sound first up. Perfect, thank you, Julia. Thanks all. Great stuff. Well, let's begin our February Talking Recruitment. Welcome along. Karen, if you've already done it. For those of you who don't know me, Neil Carberry, the Chief Executive of the REC. I am joined, as I often am on these, by our Deputy CEO, Kate Shoesmith. Good afternoon, Kate.
Good afternoon, Neil. Nice to see you, and nice to speak to everybody again.
Yeah, it's always an occasion, a Talking Recruitment webinar, and you can tell that by the fact that I've put a shirt on and Kate's put a jacket on. We're dressing up for you all this afternoon. It feels a long time since we were doing these from RECHQ, but maybe as the vaccine rolls out, we're heading back towards something more like normal. So today's agenda basically we'll run you through all the latest data from our side, a bit on big picture trends that we're seeing, what we think's going on in the market and likely to go on in the market through the first half of the year and into the summer. An update on all of our activity, speaking up for you, and then an update on everything else that the REC is doing. Just mark your card on some important issues for recruiters as we go into 2021. If we move the slide on, please, Karen. We wanted to start just by taking a temperature check. How's January been? How are things for you right now? I run this little poll, dead simple. How's it started for you? Business is good. We're doing better than we did in January 2020. It's okay. It's better than the lockdowns, but there's room for a bounce back. Pretty flat, but holding up, or more of a concern. And we're just interested in seeing across the attendees that we've got in today, how you're feeling. And it's really important to us because anecdote from members like this really colours the survey data. And we find ourselves with ministers and with secretaries of state telling stories more than just sharing data, because ministers like insight. So this kind of feedback from you is really important to us in telling the story. So have a vote on that as we go. Give it a little bit of time for everyone to vote. And then, Karen, can we have the results up now? So results-wise, not surprising, I think. 42% saying, okay, it's better than the lockdowns, but there's room for improvement. So on that path back. 27% saying it's pretty flat from the last few months, but holding up. And considering we're in the midst, in England at least, of a major lockdown, that's pretty good going. 15% saying business is good, and 15% saying another decline in January. So I think tough, but also some evidence from the poll that things are holding together better now than they were through certainly the first lockdown last year. And with the challenges that we're all facing, home education being one of them that's particularly close to my heart, that's not a surprising set of results. So thank you very much for that. If we can close the poll now and move the slide on. We'll start just with an update from our work on what's going on in the labour market, the latest REC surveys and intelligence from ONS. Kate, you're going to walk us through some of these.
Yeah, thank you very much, Neil. And I think the members' input just then really helps put a context on some of the data that we're getting, not just from our own sources in terms of REC regular jobs data reports, but also what we're seeing more broadly. So we'll start there with the broader macroeconomic picture, if you like. If we move on to the next slide. And this really has been borne out in a lot of the conversations that I've been having with recruiters and our membership. Not unexpectedly. So the last time that we have the data for, we saw that there was the record growth in terms of GDP in the last quarter. But of course, what you've got to remember there is that this is coming up from an extremely low base. So we did see that there was such a decline at the start of the pandemic and the lockdowns, and things did come back, but they're not back to where they were in pre-pandemic times, that's for sure. And then on the right of this slide, you've also got the situation in terms of the employment numbers. Now, if you recall, when we were having these talking recruitment webinars at the start of 2020, and we were saying that there would be a situation where some of the forecasters were talking about unemployment rates reaching between 7 and 15% by the end of 2020. You can see that the numbers there have not reached that excess, and it's in large part due to what's been happening in terms of the government support programs like the Coronavirus Job Retention Scheme. So we got to the point where the latest data from the ONS survey shows that unemployment is now at 5%. But there are an extraordinary number of people that are currently on furlough. So the big call from us is obviously, what do we do in terms of asking the government to continue the scheme? And we'll come on to talk about that in a bit more. So if we move on to the next slide, we'll obviously share all of the information from today's webinar. We'll share the slides with you, so you've got the data points. And really and truly, this is just we'll talk through it now, but if there's anything you want to see in terms of follow-up, in terms of this, from this, when you get the slide pack, then obviously there's some information available on our website, and the links will be embedded in these reports. But let us know, because there's an awful lot of research on the REC website, and we'll pinpoint you to the right places if you need it. So look, moving on to REC data in particular, what you can see here is this is our survey of employers in terms of their confidence in the economy and their hiring intentions in the short to mid-term. We published the last set of polling data from business hiring managers, employers at the end of last week. And actually, it was fairly positive news. Now, confidence in the economy, as you'd expect, has been at rock bottom. It was throughout much of 2020. But when it came to thinking about who they were going to hire and the demands required for staff, actually it was fairly positive news. So we saw that there was some more incentives to bring on permanent staff. When you look at the data, that's often driven by the fact that they just don't have any spare capacity in the workforce right now, but a very high demand for agency staff. And looking across, there were some key sectoral trends. So not unexpectedly, health and social care, it's particularly high demand for people right now from the employers surveyed. And actually, when you think about it, there was other sectors that were equally important. So thinking about the trends we've seen in terms of construction and property services and the demand there, thinking about warehousing and logistics, and also engineering and IT. So a number of areas where actually that positivity in hiring intentions was playing through from employers. Thinking, if we move on and thinking about what's actually been happening in terms of recruiters' perceptions. So if we go on to the next slide, report on jobs obviously looks at what our members, recruiters, are saying has happened on the month just gone. And December was a largely positive month. Now, this is definitely borne out in the conversations that Neil and myself and others in the REC have been having with members. It feels like, actually, despite the situation, that December was far more buoyant and more robust in terms of that labour market sentiment, and placements were being made. There were obviously sectors that couldn't perform as in line with what you would normally expect in the Christmas run-up. Retail and hospitality chief amongst them, where we really clearly need to see specific support packages for those sectors. But in other areas and across the UK, there was strong demand. One of the things to watch out for, and if we move on to the next slide where you can see this in a bit more information, is the regional differences. And so we've highlighted here how in England, the only area that had fewer job adverts year on year was London. So this slide summarises our work with EMSI, our jobs recovery tracker data, which we've been using since May last year to look at the number of job adverts out there and tracking across the job boards and aggregating that and making sure that we're not double counting. So what we can see is the clear winners and losers by occupational class there in terms of job adverts. And actually just yesterday I was speaking with some colleagues working specifically in the care sector, and for them they were saying that the demand is so high right now and that they really need support in terms of seeing care and social care in particular as a profession of choice, and some of this data is bearing that out. So that was our really quick run through in terms of what we're seeing in terms of the data. And what we want to go on to do now is just take a bit of time to think about what this means for all of us working in recruitment and how it's feeling on the ground. So Neil, perhaps if I come back to you at this point.
Thanks, Kate. So if we move the slide on one, and just to give this a theme, well, how do we bring this home? How do we understand it? As it affects us. And a couple of big themes from what Kate was just saying. You saw on that first slide the big gap between employer perception of the wider economy and employer perception of their own hiring plans. So a great deal more confidence in their own business than they have in the macroeconomic picture. Now that of course is driven by COVID. It's also driven by the fact that we're a month into Brexit and we know that there are some chunky issues at the border that we're needing to work through. I think as things move through the vaccination rolls out, we get more into normality. We're going to see that a bit with people movement as well. Just started to become aware of differential application of coming into EU countries for work between France and Germany and Italy, for instance. A conversation with some of the other sector body chiefs I was on yesterday. So there is a lot of concern still out there about the wider picture. And I think that's what's driving that sense of wanting to lean to temp at the moment. Always happens at the beginning of a recovery, but actually also maybe supercharged this time by the unpredictability of the COVID pandemic and by just waiting and seeing how things play out in terms of the Brexit deal. The other big thing that's probably worth picking out is that some of the changes we're seeing, as Kate was saying, are what economists would call secular. They're long-term trends. IT will continue to grow. High street retail will continue to employ fewer people. We knew these things were happening before the pandemic. They've just been supercharged. On the other hand, some of them are cyclical. For instance, I think we all believe that restaurants are a thing. I certainly hope they'll still be a thing in 2023. And so there will be a bounce back there. And I think thinking through the impact of the pandemic on different sectors that you service will be an important part of getting business decisions right going forward, particularly at the sub-regional level. I think, Simon, we do have some specific numbers for the Midlands, which was one of the questions in the box, which we can share after the webinar. But it's not just about regions, it's also about urban and rural. We've definitely seen that London's been hard hit because people have to travel to work on public transport. The same's true in other major city centres, but less true around the edges of cities where people can park on business parks, for instance. So I think a lot of those dynamics will play through. Now let's think about what all that means for recruitment. Karen, if you move the slide on, please. Back in December, we published the 2020 version of our industry status report. It's available for our EC members online now. It's a fantastic read that Kate and the team put together. What's clear is that in the run up to the pandemic in 2019 into 2020, we sort of measure financial years, so up to about April 2020. We saw continued growth in the sector up to £42 billion gross value added, about 2.1% of the total of the UK economy, so £1.50 in the British economy generated by recruitment, nearly a million permanent placements and nearly a million temps on a site every day. So a big, substantial industry employing 119,000 people across 31,000 businesses. That is a very substantial and resilient industry going in. We know we had a tough 2020. We did the initial findings on that as part of this year's industry status survey, just to avoid having to wait a year to get that data to you. We saw the contribution fall by about 22% over the year, so about a quarter, just under less. Permanent placements down by about 20% across the first 6 months. Contractors down by about 30%. We think there's some lag effect on the permanent placement numbers there, and actually they might fall a bit further once you take into account that there were people starting jobs in April and May that had been set up before the pandemic struck. But more than anything else, what the industry survey tells us this year is the industry has been resilient, and we get that message back from you, both in the poll and in the conversations that we're having, which is a lot of hard work was done in 2020, but largely members that we're talking to feel like they're fit to trade in 2021, and potentially are fitter to trade than they were going into the pandemic. And I think that's really important, because actually I'm a real optimist about what the industry can do in 2021. Could you move the slide on, please, Cam? So it's clear that we are currently in a recession. The November lockdown caused the economy to shrink a little bit. This lockdown will cause the economy to shrink a little bit. The economy is still more than a great financial crisis smaller than it was in February 2020. The advantage is that lots of stuff should just bounce back as we turn it on, and there should be an engine that drives that. And I'll go into that in a minute. But we put on this slide just 10 top predictions from our partners at Ihs Market, which emphasize the strength of the challenges that we face. I think just some things to feed into your own thinking about where in the industry will grow. So I think the critical point I want to draw out here is point 2. The global economy enters 2021 at a subdued growth rate and will accelerate to a brisk pace in the second half. Let's bring that home to the UK. Why is that? Move the slide on, please, Karen. Well, here's 2 figures from the Bank of England's November monetary policy report. This actually gets replaced in the next week or so by the new one, but I think it gives 2 reasons why 2 reasons for optimism that acceleration is going to be there in the UK. Now, clearly, the Q1 outturn for the UK will not be as positive as the growth chart on your left as you look at the screen, because we were in this third lockdown. But that bounce back is really quite robust as you look at the range of potential outcomes that the bank set out back in November. And importantly, while the economy is still more than a great financial crisis, smaller than it was in February, it is now the case, as Kate was hinting at earlier, that unemployment will not rise, likely, to the kinds of rates that we saw after the great financial crisis. The peak now predicted about 7.5%. That is pretty standard for a standard British recession. So if you're having that at a time when you've had the biggest recession for 200 years, I think it's reasonable to say that the challenge of high candidate supply and the risk of clients going themselves, potentially getting it wrong but giving it a go, is going to dissipate quickly. And the big issue in the UK economy going forward is likely still to be the tightness of the labour market, skills shortage and labour shortage. If we move the slide on again, please, Karen. And this is why I'm really convinced that the bounce back happens big in the UK in the middle and end of the year. The graph that I put on the left of this slide is the household savings rate. It's you, it's me, it's Kate. At the end of the month, what have we got left? What do we leave in the bank account? We put in the building society. We pay down the mortgage with, or some such. You're going to have to take it on trust. That sort of flattish blue line that starts in the winter of 2015 actually continues pretty flat like that back to the Second World War. It bounces around between 5 and 15%, according to the economic cycle. So what we saw last summer and autumn is enormous. And essentially, while there are a large number of very hard-pressed families in the UK right now, jobs lost and so forth, at the lower end of the income distribution, or particularly people working in particularly affected sectors, actually the top 2/3 of the income distribution is sitting on more cash than they ever have. And linked to that, companies are also have been holding cash through 2020. When the COVID pandemic fades, that cash will flood to the market. And I think it's a sugar rush. I'm actually more worried about the impact on the economy in 22 and 23 when that sugar rush fades than I am about what happens in 2021. So I think consumer purchases will go up through the middle of the year as some of that cash gets loosed into the market. And I think companies, traditionally, when you see a recovery, there is a bit of an investment boom from companies. We're already seeing it in our own market with more M&A and acquisitions going on in recruitment right now. We saw Andy Grobler at Credit Suisse, who's the leading analyst of the listed staffing firms, raising the outlook for all of the listed firms over the last few weeks, because we're getting to that point where recruitment, first in, first out of the recessions, is likely to bounce back, because as businesses free the cash from their balance sheets, they're going to be looking for labour as well as capital investment in that, as well as M&A. So we think that there's a reasonably strong reason to believe that there's a good bounce coming as we get out of this, and particularly the vaccination programme is really important to that. Can you move the slide on, please, Karen? So what's the message here as we bring it back together? I think it's tough out there at the moment. It's probably better now, as you said yourselves in the poll, than moving than we might have expected at this stage. It's on go slow for a little bit. Temp ahead of perm, because clients can commit to temp pretty easily. We do think there's a dam that's ready to burst with perm demand once things settle, and I think that increased activities through the summer from consumers and from companies is likely to generate quite a strong demand picture for the sector as we go into next year. And just pick up one question as we go past from Neil Smith about companies defaulting on CBILS, VAT deferral. I think that is an issue. I mean, clearly, if you look across the corporate picture, cash flow remains tight in some firms. Our view is that government is hearing the voices from the business side that cash flow support needs to persist beyond the end of March. The REC's budget submission, which we'll go into later, is very clear about CBILS and VAT repayments and VAT deferral repayments needing maybe to move out a little bit. I think that will help. I think it's the right public policy response, and I think we need to accept that we are not yet through the full cycle on those businesses who won't make it through. Some will continue to make it through. But what's really interesting, if you look at the ONS stats, is we do appear to have passed the peak of redundancies, which is a good sign that businesses in general, in aggregate, are feeling a bit more positive. So let's look at some of the bigger picture trends that might shape our future market. And if you move the slide on, please, Karen. Time for another poll. So if you do get the chance to grow in 2021, really interesting for us to understand how you might be thinking about growing, because obviously that helps us shape the support that we offer you. So we've put 5 things up on the poll today. Expanding internationally, looking to move into a new sector, looking to move into a new region, opening up a new venture, not specifically a recruitment venture, or M&A activity. So if we open up that poll now, and give you a few minutes just to think about where your priority lies. Kate, in terms of the economic and market outlook, I know we are hearing a lot from members at the moment about that transition back to growth from what has been action this day, now keeping the business afloat. Are there particular themes that you're hearing from members that are worth flagging up?
I think it's a really good point is that none of it's easy. So nobody's expecting this to come easy to anybody. And businesses have worked really hard over the last 12 months to sustain themselves. But what is coming to the fore is there has been quite a, without trying to influence the outcome of this poll, there has been quite a lot of interest in these different areas about expansion, actually. And I think that's so interesting because it's often when we're faced with the most trying of circumstances that people look at what's their strategy for development and it really tests us to the limit. So whilst I think we've spent March to probably May, June time last year just heads down, getting through the worst of this, making sure that you protected as many of your people as possible, agency workers where possible, you know, in terms of the temps on the books, just trying to really cement those client relationships. Since the summer last year, there has been a real sense of actually what's the growth and the opportunity that comes from this crisis. Now that we've got through it, what can we do in order to embed ourselves in the future and to really set ourselves up as a true consultancy service? That has been a big theme in terms of the conversation. So it'll be quite interesting to see what comes from the poll.
Fantastic. Karen, do you want to close it off there and give us the results? Looking at new sectors, just under half of respondents, 48%, looking at a new region, 24%, opening up new ventures and international expansion, 10% each, and acquiring another business about 8%. So that organic growth into new and different sectors, I think very clearly the favoured option. And I think that's again speaks to the need to kind of understand where the secular trends in the market are, the things that will persist through the economic cycle, areas where we know growth will be greater in the years to come, and that sector by sector analysis that we've been producing is, I think, important to that. Good, Karen, could you close the poll down for us? Thanks. And let's move on to the next slide. So, Kate, do you want to walk us through this one? And I'll take it after that.
Absolutely. So we'll bounce through this area quite quickly in terms of this next section of slides. It's just to give a sense of some of the trends that we are seeing from outside of the industry, and perhaps that could inform some of this growth and opportunity that we're talking about. So when we've been spending an inordinate amount of time of talking about what happens post Brexit, and where does the economy go, and what does this mean for the UK, and regardless of Brexit, regardless of anything that's going on with the specific UK context, after the 2008-9 crash, there was a real sense that actually there was we'd reached the peak of globalization, that there wasn't any further growth to be had. But if you look at some of the WTO output measures and across the piece, actually what you do see is that there are opportunities there, and that we have been seeing an increase in terms of globalization and international trade. The trade of services is definitely something that is capturing the attention of as an opportunity of the UK government. Just last week, we had a webinar for members with the Department for International Trade, and I thought it was worth sharing one of the things that said to us during that meeting, and it picks up on what I was saying about the consultative approach, is Their view, and this is from them working across over 160 different countries, was that actually UK recruitment services is one of the leading lights in the world, and that is being increasingly recognised by a number of international markets in response to some of the developments we've seen, whether that's around the increased awareness of diversity and inclusion, whether that's about how you need to bed down at difficult times and really support the client base and the candidate base, whether that's about the use of digital marketing and your social media strategy to improve your employer branding. All of that has fed into a perception that actually UK recruiters are doing this incredibly well and are really offering a true consultancy service to their clients. So I think that's just worth bearing in mind when you think about what might be the opportunities internationally. So if we move on to the next area, Neil, do you want me to cover this off?
I'm happy to do it. I think this issue of trust is really important. You saw at the beginning of the pandemic, some employers get it terribly wrong, and I think by contrast, if you think about the proclivity of certain parts of the media from certain political persuasions to give a kicking to the recruitment sector in the past, I think the sector has actually done its reputation a lot of good over the last year in the way we've handled issues. You have all handled issues with clients and with candidates. And actually that's generally true of business across the board. This is from the Edelman Trust Barometer. And as you can see, trust in business has been rising. It's actually more positive globally. Business more trusted than government in 18 of 27 countries they measure. And if you move the chart on, Karen, that's part of a long-term trend, though, of trust being lost a bit. Trust needs to be earned more than it did in the past. So if you look at the trend there in companies, gentle drop in the UK, gentle drop in Germany, gentle drop in the United States, and the same is true of governments if you look at the governmental numbers on the right there. Now, if you bring that back home, some of the kind of relative, while there's been a relative drop overall, some of the relative performance that we're seeing for business as opposed to other bodies, if you move the slide on, please, Karen, actually comes from addressing the things that people are most concerned about. Job loss, climate change, contracting COVID-19. These are things which concern or make workers fearful, and business has had a good record on doing the right thing on this over the last year. And one of the challenges for us is that reputational challenge is not going to go away as we normalize. I do think that standards and doing things the right way and being seen to make a contribution to both the economy and to opportunity are going to be critical to businesses thriving in this environment, because both clients who are going to be interested much more than ever before in supply chain accountability and governments who are interested both in economic impact and in levelling up, as to use the language that the Prime Minister uses, are going to be looking to businesses to step up. And I think there's a huge opportunity here for us as a sector to be part of the solution. If we move the slide on, please, Karen. So let's bring that back a little bit, and I think we'll go on to talk about the campaign that we're about to wage at the REC to pick up on some of these themes. But first, if we move on, let's ask one question about your worldview right now as we come out of the year of COVID, hopefully. What's your prediction for 2021? Where do you think the balance of power in all this is? Is government an agent of change in our jobs market? Is it us as business leaders who have more power than ever? Will candidates and consumers continue to call the shot? Or is there another answer? Does this not chime for you? Is there another area that will move us on? And if you do that, do pop some thoughts in the chat. There were some great feedback in the last poll in the chat that we'll reflect on and take away from this. So if you open the poll up, please, Karen, and we'll give people a few moments just to vote. And it's I think this increasingly, when I'm talking to HRDs of large companies, Kate, I'm getting a sense that people are looking for ideas, they're looking for strategies to address big questions, and some of their relations with suppliers, including recruitment firms, are more about how can you solve my problems, which include diversity, which include technology adoption, which include reshaping my business post-COVID, than kind of more specific transactional service-based discussions. And I think that means that probably the pace of change that we see in the sector will just be faster than ever as we go through this transition into the post-COVID economy.
Yeah, I completely agree, Neil. And I think the one of the things that you're getting a sense of is, if you think about some of the press coverage we've seen in recent days, not least from ourselves at the REC, is how is it that business groups are now collaborating with, on a really regular basis, the unions? So why is it that we've got business leaders coming together with the worker voice to really push for change? And we're seeing this in terms of what does it mean to be an ethical employer? Why are we all considering what it is to be human right now? Is probably the most, perhaps it sounds a bit wishy-washy to say that, but we've been faced with an extraordinary situation, and I think it's brought home to us that we are all whole people, and that we may be working remotely, but we suddenly have an insight into everybody's lives that we didn't have before in the workplace, where we all went into a single office. And understanding that, of what it is that's contributing to our role in the economy and how we are contributors to society as a whole, has become all the more important, I think. And so some of those collaborative efforts are just the starting point of that, when you've got a union and a business group working together.
Yeah, great opportunity to flag the fact that we've gone into bat for supply teachers over the last week, because the furlough rules have left them high and dry. And something that we're working very hard with NEU and the NSUWT on, which is good, because normally they don't like to be seen with us, and it's a great opportunity to demonstrate the value the industry can add. Karen, if we close off the poll now and show the results, I think a couple of great comments in the chat, not least from Neil Smith, our leading proponent in REC membership of employee ownership. I think this whole piece about responsible capitalism is gaining ground, as Hannah points out, the importance of getting the technology in place to service clients effectively and make sure that we do the human stuff with the human beings. Really interesting, actually, a fascinating split. We don't feel like we're the most powerful of the group. So 23% thinking business leaders have more power than ever. 35% thinking government is and always will be the agent of change. So we better get on to the REC's campaigning agenda fairly soon on that one. And 38% still thinking that candidates and consumers will call the shots. And I have to say, as a kind of proper responsible capitalist, I tend to agree with that. Ultimately, the consumer gets what the consumer wants. So it'll be interesting to see how it plays out. But a real sense from that poll that you can view this issue in a number of ways. And that there's both a challenge to business and to recruitment specifically in where things are right now, and a real opportunity. So why don't we close the poll now, please, Karen, and move on to the next slide. And Kate, why don't you kick us off and just take us through, how we're starting 2021 in terms of the push that we're putting into REC campaigns.
I think when you write down some of the points of what we're facing right now, it feels quite extraordinary. So we expected the start of 2020 to be dominated by talk of IR35 coming into the private sector. Who knew that that wouldn't even be a thing for recruiters, really? It was like the very last of the issues. But we do know that it is expected to happen from this April. We are pushing back on it. But that's just one facet. You've also got, we're in our third national lockdown. Obviously, we've had talk in Scotland about what they're going to do from the 22nd of February, and we all wait the announcement from Whitehall and Westminster of what will happen. That's due for in that week of the 22nd of February. We have a trade deal, but it's very services light, and we've had the on or off again sense of whether there's going to be a bonfire of workers' rights from the new business secretary. But what we do know is there's bound to be some regulatory reform in the post-Brexit world. And we know that we have a Chancellor's spring budget coming up. From our perspective, that's too late because it's on the 3rd of March to give us absolute clarity on what's going to happen in terms of the next steps with the coronavirus job retention scheme and the other support packages, and we'll be pushing on that. But all of this is the context in which we're operating. So for us, it's about how do we make sure that recruitment businesses are understood from a government perspective so that that cash flow implications for recruiters, the on and off again way that the supply works in tandem with the support packages, that there's an understanding that we need to have more comprehensive measures in place from the 30th of June and onwards, once it's the end of the settled status determinant, and that we do retain digital right to work checks. Thinking about more broadly about what do we do to recover is also important. So for us, there's a lot of work going on in terms of thinking about how we demonstrate the resilience of the UK labour market, and it is an incredibly resilient market, and that we need to really prioritise the role that recruiters can and will play in the recovery. And we'll come on to talk a bit about exactly what we're planning there, and then what we need to do in terms of the regulatory action. So from our perspective, and talking to members, there isn't an appetite to start again on the agency worker rights. Why would we touch that when it's working in practice right now? We've got used to it. It's something that's there. But what we really can do with and would be supportive is to regulate all parts of the supply chain. So having absolute clarity on umbrella companies, defining them in legislation would be a great first step, and would take us into an area where the UK could really consolidate its position on the global stage. So I just, if it's, I'll go on to the next slide and we'll just talk a bit about the bigger picture of what we're going to do. So Karen, if you move on to the next slide. In the next month, you will see a major contribution from the REC that will help position the role that recruiters play in the labour market. We have worked with an external research agency, and we are talking right now to how we can embed this in the highest places in government and with our stakeholders. And it takes us on from the results that Neil was sharing around what the recruitment industry contributes in terms of the number of placements made every year and our return to GVA, thinking about it in a bit bigger scenario. So what is it the recruiters provide in terms of direct and indirect contribution to the economy as a whole? What's the tax return? And it's huge, by the way. How is it that we what's the role played by temporary workers that are supplied by agencies on a day-to-day basis? So we'll be launching that, and it will be in the middle of February. We'll provide a full support kit for members so that you can use this, not just in terms of thinking about your business and where you're going next, but thinking about your marketing opportunities and client pitches in particular. How do we use this to position you as real agents of change in terms of the jobs market?
I think that's really important, Kate, isn't it? Which is, there's sort of two audiences for this. One is to get the place at the table that we need to win the arguments in government that members need the REC to win, but it's actually also for REC members to win the arguments with, well, arguments probably the wrong word, with clients, discussions with clients about the value add of working with an REC member to things which they care about, to their inclusion, to their productivity, to their growth, not just the speed at which seats are filled. And you're absolutely right, the numbers are pretty spectacular. And by the time we've finished this campaign, it's our goal that people will talk about recruitment and the UK economy in the way that they talk about financial services in the UK economy, in the way that they talk about the law and the UK economy as a really big, critical service industry, which of course goes to the heart of the feedback that Kate shared from the DFT webinar that we ran recently earlier. If we move this slide on one, I think a classic example of kind of getting a decent place at the table means is the work we did over the last couple of months on access to vaccines for agency temps, isn't it, Kate? Do you just want to give us a bit of insight to that?
So when we're positioning ourselves as being able to influence government and using some of the data that we said we were providing this impact report, we just wanted to give an example around how it can work. And I thought the poll results were interesting in terms of where's the balance of power, so across government, business leaders and the candidates, consumers themselves. At the start of this year, it became very obvious to us that agency workers were not getting prioritised in terms of access to the vaccine, and were being told quite contradictory stories by different NHS trusts and care providers about when they would be in line for the vaccine. It seems like a no-brainer to everybody, is that why would it matter what type of contract you're on? Surely these frontline workers should have access to the vaccine at the same time as their permanent substantive equivalents. And so we set about at the end of December, prior to the Christmas break, talking to the Department for Health and Social Care about this and making sure that it was raised up their agenda, so that by the time we got back in January and we were hearing that there were still instances where agency workers were being given quite conflicting stories, that we could really push on this. So and now we have a situation where it is all written out in full, that it doesn't matter where you work, and regardless of your contract type, agency workers will receive the vaccine. And we have been working across our membership to share information about how they're pushing for this to take place. So if an agency worker does still hear a story or is given incorrect information, the agencies have been working with us and with each other, which is really important, to share that information about what they can do to make sure that they're in line for the vaccine. We think that this is really such an important agenda that it should extend to all frontline workers. And of course, it's vitally important that as we reopen schools, thinking about our logistics and warehousing and retail services that have kept us going during this time, that those temporary workers are also not left out of the picture. So we're talking to the minister responsible for vaccine deployment around this, and making sure that the case is heard. So it's just an example and a very specific way of what we can do when we collaborate and work together on such an issue. If we're moving on, because and thinking about some of the broader pieces that we're doing for now, and this is just, I suppose, the next couple of slides is just to give you a sense of what matters most on our agenda, and why and where you can come in, really, and how we need your particular support on some of these items. So if we move on, the first one we were going to talk about is the spring budget. Now, Neil, you've obviously been speaking to Treasury quite regularly. We've got our list here of what we're calling for. Where's your hunch? Where do you think we're going to fall in terms of this?
Yeah, I've been talking to my text mate who is in Rishi's office. Look, I think the ask from the business community as a whole, and you remember that we at the REC for Recruitment coordinate with other sector federations and other sectors and with the CBI, is really about keeping that cash flow support in place. So I think there's a reasonably good chance that we will get significant action to maintain cash flow support. Now that might just be extension of CJRS beyond its current date, but I think for deferral of repayments, going back to the question that Neil Smith was asking earlier, I think is on the cards as likely. I think we may see commitments to some tax changes. I think there's a general view that we need to pull forward tax support to business away from just having the lowest rate of corporation tax in the world, and maybe saying it's fine, actually, as long as we have a lowish one in the G20, that will be fine. We really need to address the taxes that exist on doing business. So committing to business rate review. Members will know that we think that reducing employers' national insurance is important to supporting labour demand at a time like this. And I do think that there is more appetite than ever to look again at the apprenticeship levy, which clearly is widely known to as a policy which has failed in its own terms. As part of that, there are some kind of parochial recruitment issues which we really need to get right. We're still talking about an enhancement of the statutory sick pay rebate scheme for the length of the pandemic to make sure that agencies have proper support for 14 days of sick pay, which of course encourages people to take a test, and when they take a test to tell you about it and to isolate. We're also, as we'll go on to talk about, thinking about public sector suppliers. And the one thing that, of course, is at the heart of every submission to the Chancellor from the REC is IR35. I just want to emphasise that while we are suggesting that it pushes back again, and particularly because we think the umbrella company regulation needs to happen before it comes in, it is on the statute book. It is time to come in with April. We're asking for it, but the good trade association is honest. When you don't think you're going to win, our chances of IR35 not happening in April no greater than 25%. So businesses really need to be ready. So all the stuff you need from us is on the IR35 hub on the REC website. It's a great podcast recently. We're running events and so forth. Contracts have been redone. Do make sure that you don't let that change fall into the background in the midst of everything else that's going on at the moment. If we move the slide on, do you want to just run through this one and the next one, Kate, and I'll pick up from there.
I'll skip really quickly through these because we're supplying all the slides to members after the event. So Neil's already mentioned how we think it's absolutely imperative that there's clarity around the requirement to backdate supply teachers' pay to the start of the school term, to the January school term. Now, we are anticipating that this will get noticed because we have joined forces with the TUC and with the education unions. We have specifically asked Treasury and HMRC if it is possible to backdate teachers' pay to the start of the school term, and they have replied that it's not possible. Now, what you need to think about is the fact that the CJRS was last updated in November. So that is why it has not taken consideration of this particular point, and that's why we're pushing government to make a change here. Moving on, the other thing that obviously is so important right now is, if we move on to the next slide, is just thinking about what's happening with the vaccine program itself. And we are getting questions to our legal helpline about whether it's mandated on your workers, whether that's your direct employees or your temporary labour force, to take the vaccine. And of course, it's not a legal requirement. But what we've done here is we've set out on the slide some reasons for you to consider in terms of how you would have that conversation and how you're very clear about your own employer health and safety obligations to your staff. So it is a consideration, but it's just worth making yourself aware of this, because especially as the vaccine program goes further and goes beyond the priority groups. I think this takes us on to the next slide. And Neil, you're going to pick up just on in terms of the employment bill.
Yes, the employment bill, which you may recall, if you're a regular on the webinar, was going to be in autumn 2020. It's now in spring 2021. I would remind you all that in civil service speak, spring 2021 means introduction of the bill anytime up to and including the 21st of July, when the school summer holidays start. We haven't seen a lot of progress on this over the last few months. It's a really important bit of legislation, given that it covers off umbrella company regulation, the creation of the single enforcement body, changes on flexible working, and the right to request a stable contract. These are big, substantial changes. And I think it's fair to say that government is the guiding light of government on employment regulation has not really been clear over the last few weeks. A couple of things you should be aware of. On Monday, they allowed Matthew Taylor's appointment as Director of Labour Market Enforcement to lapse. That means there isn't a Director of Labour Market Enforcement, which means that the office of the Director of Labour Market Enforcement, which is critical to the creation of the single enforcement body, cannot do anything until there's an appointment. And that appointment could be a month or two or more away. At the same time, you may have seen the spat over the Employment Rights Review post-Brexit, which was an Employment Rights Review in Bays, and then it wasn't an Employment Rights Review in Bays, and now it's a number 10 EU regulation changes review, not specifically on employment. So there's a lot of change here, most notably actually the change of Secretary of State that covers all of this. Kwasi Kwarteng, of course, is now the Secretary of State for Business. I'm really pleased to say that we had very positive interaction with him in written form when he was appointed. He's invited us to come in and talk through issues with him. Critical that we take some ideas in to that, and some of what we're doing. Kate was telling you about the work on the role and purpose and contribution of the industry that we're launching later on this month. Likewise, on this slide, we've pointed out that we're doing some work with the TUC on both immigration guidance and on disguised remuneration, because I think we should try and solve legitimate problems raised by people like the TUC as part of demonstrating why the industry is part of the solution. So lots of work to do. We'll flag up to you when a bill arrives, but realistically, I expect to be talking about that in the summer, not in the next webinar. If you move the slide on, please, Karen. And just picking up on this one area that Bays have been consulting on is non-compete clauses. And this is clearly something that is very valid in your own firms. Many RAC members use them to protect the business when consultants leave. Government is thinking about how COVID-19 affects that. And I think we've had, Kate, a reasonably robust set of feedback from members on these two options.
Yeah, so from our perspective, and this is where we would really like any comments. This is not necessarily causing many of our members sleepless nights. In terms of, it's a case of where they are used, they may be a situation where contracts haven't been reviewed particularly recently. There's often a more considered approach when it comes down to it, rather than the legalese if it does come into bear. So there is a sense that actually that the use of these clauses is a bit antiquated, if you like, in some ways, which supports the government's agenda here. At the same time, we need to protect your business IP. And it's that's the most important point, regardless of what form is used, that we've come to from the members' input into this. So we've still got a little bit of time. So we've only got another week until this closes. So if people do have other views, then it is time to feed those in.
And that piece around effective non-solicitation clauses being potentially a better solution is one that I know Patrick and the team are working on. So if you are interested in that, that's still open. Patrick's details are on the slide here. If we nick on to the next slide, please, Karen. Really important, I think, that the REC takes a stand on inclusion, opportunity and diversity. So important, actually, that you can see a rarity here that I and Anne Swain at APSCO are working together on this one. Actually, Anne and I have known each other for years and we get on quite well. So it's nice to have something where we can do something for the whole industry together. We've linked an anonymous survey here, which we're asking members to complete. When you get the slides later in PowerPoint, you'll be able to click in and fill it in. What we're trying to do is really just baseline our own industry on these issues so that we understand where the challenges are and what we need to do. Please do fill it in, share the survey with colleagues. It's going to be the basis of some joint REC and APSCO work through 2021, and I think important that we as recruiters demonstrate we're taking a lead in our own industry, because of course one of the great reasons to use the industry for clients is that we can help clients to improve their own D&I performance. Karen, if you move the slide on, please. And the last one for the moment is just to be aware that the Gangmasters and Labour Abuse Authority is building its new compliance strategy. They are currently consulting on that. It closes this month. Please do get in touch with us with any views that you want to share on that, or if you'd like some support for a separate response team, very happy to help. Usual slew of things on that agenda, from the scope of licensing through to the fees regime, through to compliance inspections, everything that you'd expect the GLA to be thinking about if you're a GLA licensed firm. A real opportunity for us just to land a few points. Big change in the leadership of the GLA over the last 6 to 9 months. So important, I think, to get the REC voice heard in that. That's really the core of our February agenda. The rest of the packet we don't really propose to go through today. We're running out of time anyway for today's webinar. What it sets out for you is everything, all of the services around getting IR35 ready, the REC qualifications, which of course are now all available online. We examine online now rather than using an old-fashioned school hall like you might remember for your GCSEs or your O-levels. All of our training courses, and a reminder that the compliance test, if you haven't taken it in the last couple of years, is due to be done by the 30th of June this year. So you'll hear from us on that as we go through. There's also some links, Kate, to some of the latest content that we've been pushing out in Recruitment Matters and the podcast and some other areas.
Yes, and that actually gives me an opportunity before we close to answer Anne's question. So we've recently recorded a podcast that's specifically around IR35, and we have a couple upcoming that are that will talk a bit more about the campaign work we've been doing in terms of getting recognition from the government around what support is available for directors of limited companies, for those people that have fallen through the gaps, actually, in terms of the support packages that have been available in the pandemic. And we're particularly liaising with IPSE, who are the organisation who represent freelancers and contractors and others, to really push the Chancellor to think again on this. Because why isn't there more support for those people that are self-employed, that have built up their businesses, reputable businesses over many years, and have really struggled to keep going during this time, and have not had the opportunity to benefit from the packages that have been available to others. So we will continue to make that case. It is part of our submission to the Chancellor for ahead of the spring budget. We included it when we contacted the Chancellor at the very start of this year to set out our priorities way in advance. And what we think is so important is that we do work with others like IPSE. So more to come on that, and watch out for the podcast next week.
I think that absolutely spot on. What I've often said to members on this is it might have been sustainable to back the Chancellor's view back in March and April that directors have been paying themselves by dividend and paying less tax for a few years, and they're therefore not top of my priority list, which basically was the Treasury's view. And that might be sustainable in March and April 2020. It is not sustainable by the end of 2020 and into 2021. Something needs to be done. It's interesting to see Northern Ireland taking action now So we know it can be done. There are workable plans on the ground. If you look at the FSB's plan, for instance, we continue to push at it. Now, thank you all very much for joining us. I know we've gone over time a little bit, but hopefully you found all of that useful. There's lots more in the slides for you to dig through in terms of REC support and what we're doing. Exciting times, I think, as we push back from what's been a heck of a year. Appreciate all your time as always this lunchtime. Kate, thank you for joining me.
Thank you, and nice to speak to everybody again.
And thanks to Karen and our team for supporting the webinar. It's a pleasure to be in touch. As always, if there's anything you need from us, just reach out to me or to Kate. You can find me on Twitter or LinkedIn, or you can email neil@rec.uk.com. Have a great rest of your day, team.